Okay, now that you guys understand how to do channels, trend lines, the zones, understanding raw market movement, um, understanding the breaks of the retest, breaks of the trend lines and the retest, how you're looking for entries near there. You guys already know about Fibonacci, basic Fibonacci, and the basic ABCD pattern. Okay, so now we're going to dive into support and resistance, which is what I use. It's called Quarters Theory. Okay, Quarters Theory is a book by the man named Ilian Yotov. Um, the book is called The Quarters Theory. I'll put a picture of it right here. It's called The Revolutionary New Foreign Currencies Trading Method. It's a great book. It teaches you a lot, not just about support and resistance, but about market formations, market structure, stuff like that. But basically, the way you set it up on your charts is you go on your weekly chart or your monthly chart or whatever pair you're on, and then you're going to start separating. First, you start off from 1,000 pip increments. So I'll put up the picture right here. You start off with 1,000 pip increments, and then within those 1,000 pip increments, you actually divide it by 4. All right, so 250, 250, 250. Hence Quarters Theory. All right, every 250 pips, there'll be a support and resistance line. When you do it on TradingView, all you're gonna do, so you don't make your charts really cluttered, all you do is take a horizontal line, lock it, and then on your quarter point, and then change the color and make it semi-transparent. Okay, so it doesn't inflict on your your charts don't get too cluttered with all these horizontal lines everywhere. Okay, so you can just make them semi-transparent, like I have them here. Okay, I'll pause here for a second. This is Canadian, USD Canadian. I have almost all the quarter points, right? All right, so I start off at 1.1, 1.125, 1.15, 1.175, 1.2, 1.225, 1.25, 1.275, so on and so forth. Okay. And many people ask me, why do I use these? Well, basically, they give me targets, they give me structure, they give me support and resistance. They're very, very useful. So let me go to the daily chart, and I'll show you what I mean. Okay, so let me just show you a quick little example. Notice after this huge drop off of the Canadian dollar, where did it stall? Where did it start pulling back to? Right at 1.25. All right, it spiked through. Daily chart never closed below, which is a big clue that it's going to pull back. And then what did price start doing? Pulling back. All right, where did it stall? 1.35, and that's where it double topped, and that's where we're at right now. It dropped. Okay, so now we're just ranging between 1.3 and 1.325. Okay, we're going to see if it breaks to the downside. I'll be targeting the next quarter points. All right, so they also act as targets. So what I mean by that is, if on the daily chart you get a break close below a quarter point, more than likely not, it's going to try to go to the next quarter point, right? So what do I mean by that? Okay, right here at this double top, you see how price closed below right here? It closed right at the quarter point right here, right? At this daily chart close, daily candle close, it closed right at 1.35. Okay, there would have been an entry. Okay, off the double top, right? Our risk would have been minimum, right? Our stop loss could have been real tight up here. Where are we going to target if we're using the quarters theory? Well, our target's going to be the next quarter point, okay, which was 1.325. Okay, so that's a 3-to-1 risk to reward ratio. If I tighten up my stop a little bit more, it'll be 5-to-1 pretty much. Okay, 5-to-1 risk to reward, just using quarters theory. Right, this is very, very simple stuff, guys. It's based off the daily chart and the 4-hour chart. All you're doing is waiting to see if you're going to get closed below or above these points, and then combine it with other things. Don't just use the quarter point. Obviously, combine it with Fibonacci, combine it with other things, harmonics, trend line breaks, stuff like that. So you can actually see that it does provide a useful, clue to what's going on in the market. So let me find another example. So right here, we have an up move, a pullback. Remember, we always wait for a pullback before we get into the trend, right? If we're in an uptrend, we're always wait for the pullback before we get back in. Okay, right here, we use our Fibonacci, low to high. Get a nice 618 near 707 tap. And notice that when price closed that reversal pattern above our quarter point at 1.225, that would have been our entry, and our stop loss would be real tight right below. Alright, stop loss would have been near the low. And our target, if it closed above this quarter point, 1.225, our target's going to be the next quarter point. Alright, which is going to be 1.25. Alright, but looking at it, we would have known that there's a previous high right here, most likely going to break on the uptrend. So we're going to target our next quarter point, 1.275. Alright, that's already 400 something pips, 484 pips on the simple Fibonacci quarter point trade. Alright, so just use them as support and resistance. What you're also going to notice is on 4-hour charts, you're going to notice head and shoulder patterns, stuff like that, forming near the quarter points. So like right here, we topped off, semi-triple top, pull back, and then we finally get a break to the upside right here. But let me look for some type of structure. I'm going on the 4-hour chart. Right here, we got a double top. Let me zoom in on that one. See right here at this quarter point, 1.325. It's a 4-hour chart. Notice how we get a double top. Boom. Lower high on the second pass. And then we finally get a breakthrough. Market structure, we start looking for shorts. Okay. So there's a double top. Double top right here. Right here. Double top, semi-double top, right? Above the quarter point, and then it fell back down below. Start looking for entries, alright? So you look for entries when you get a break close below, or you see some type of structure like this. Alright, reversal pattern right there. You get a break below, sell. Start looking for the next quarter points to be hit. Okay, and then you'll be combining Fibonacci trend lines and stuff like that, so you don't get faked out. All right, so say I do a trend line from here, run it up, 1, 2, 3, 1, 2, run it through. See how we get a break below the quarter point, and then we finally get a break of a trend line. There, I would have shorted right there. Okay, and then target the next quarter point. All right. If you're confused, I'm going to put up my other quarter point training video, which was from Forever and Profit. I'm going to put it here below. Watch those videos, and if you're still confused, hit me up about it. It's very simple stuff, okay? You're just using it as support or resistance, all right? And you're seeing also as targets, okay? So on to the next video, guys. The next video is probably going to be understanding target zones and projections and marking up your charts for the future. All right, peace.